Good morning, everyone, and welcome to today's webinar, Sanctions, Managing Risk and Opportunity in an Increasingly Complex Environment. My name is Margherita Birri. I am an editor at the Legal 500, and today we are delighted to be partnering with HFW. A big thank you to both the panelists and the audience for joining us today. This webinar focuses on how, as rapidly evolving global sanctions continue to create unprecedented challenges for multinational businesses. Within this context, managing risk and pursuing opportunity whilst ensuring good relationships with customers, suppliers, and service providers requires a more complex and cautious approach. A breach could not only trigger civil and criminal penalties, crippling loss of access to international finance, but also often causes irreversible reputational risk, as well as the challenge of managing internal and external investigations. Global sanctions and investigations experts, Daniel Martin and Anne-Marie Ottaway, partners at HFW, share key insights to assess and manage sanctions risks. So we'll be analyzing current global trends, emerging sanctions challenges, role of sanctions authorities, practical steps to manage sanction risks, internal and external investigations. For what concerns our speakers, Anne-Marie has over 20 years experience in economic crime-related matters, including over a decade at the UK's Serious Fraud Office, and was the specialist advisor to the House of Lords Select Committee on the UK Bribery Act. She acts for clients in all sectors on cross-border internal investigations into suspected misconduct. She has extensive experience of advising corporates and individual suspects and witnesses in connection with regulatory and law enforcement investigations and prosecutions involving allegations relating to financial crime, and also advises clients on follow on remediation and compliance. Daniel advises traders, ship owners, freight forwarders, insurers, and brokers on a host of regulatory and compliance issues, including international trade sanctions, export controls, customs, and anti-corruption legislation. He advises on all aspects of the EU and UK sanctions legislation, and he's also familiar with the application of US sanctions to non-US persons. Daniel also advises clients on disputes arising from charter parties, sale contracts, bills of lading, marine insurance, and logistics operations. And he uses that experience and expertise to provide detailed, practical advice, which is tailored to clients in the commodities, shipping, logistics, and marine insurance sectors. As well as advice on dispute resolution, customs, and regulatory compliance, including ways to engage effectively with HMRC and other regulators. He also advises on compliance procedures and controls which traders, ship owners, logistic companies, banks, insurers, and brokers should adopt to minimize risk. So we would like the discussion to be as interactive as possible. Then we welcome the audience's questions through our Q&A function. We will have time at the end of the session to answer your questions. And the webinar will be recorded, and the recording will be made available on our website to everyone. I now hand it over to our panelists. Thank you.
Thanks, Margherita. Good morning, good afternoon, good evening if anyone's joining us very late in the day. And first of all, thank you very much indeed to everyone for joining us. We're looking forward to running this session. And I want also to say thank you to Margherita and the Legal 500 team for putting the session together and organising it for us. As Margherita said, we are going to run through a few topics and then we'll have the opportunity at the end for Q&A. We would really appreciate your questions and we will cover all the questions we can in the session. But similarly, you will have our contact details, and therefore if anyone has any questions they'd rather raise via email separately or want to follow up with us afterwards, then do please feel free to get in touch. So just moving to our content slide, and so the topics we're going to cover are set out there. Essentially what we're going to do is we're really going to look at two issues. we're going to look at where are we at the moment with sanctions. In essence, what's the current position? What are the types of restrictions we're focusing on? But also what happens if you get it wrong. So having really identified the what, in other words, what is it we can't do and what's going to happen if we get it wrong, we're then going to look a bit more at the how. So how do we investigate a breach? How do you manage these risks? How do we ensure that we're dealing with regulators in a effective way in order to ensure that the best possible outcome? So we'll run through those 5 points in terms of current position, what happens if you get it wrong. We'll look a little bit at what have we seen so far in terms of enforcement. And I think a theme that we will return to as we throughout the session is that there has been a long and detailed history of sanctions enforcement from the US, really, whether you look 10, 15, 20 years in the past, that has been a strong trend, and particularly focused around breaches of Iran sanctions, but also Syria, Cuba. Historically, less enforcement from the UK and from EU jurisdictions, but as we'll see, it seems that things are changing there as well, and therefore we're expecting that the next 12 to 18 months we'll see a significant amount of enforcement activity from regulators in the UK and the EU, and therefore a very timely session, and hopefully you'll get some value from it. If we move on then to where we are in terms of the current position. So I've got a couple of slides here in terms of current position, and really with the view to sort of making 2 broad points, and then we'll dive into the detail. Clearly, the 2 broad points I want to make around the current position with respect to sanctions is that it has been and continues to change rapidly. This is a difficult area for compliance officers, for GCs, for boards, and indeed for external advisors to advise, simply because things are changing so rapidly. And we all understand the reasons why they're changing rapidly. It's a difficult and an evolving situation on the ground, and there has been a need to continually adopt new measures. But that is one of the key challenges, is that things are changing rapidly. The other challenge is the complexity. What we have seen, if we look back to February and early March, are a range of different measures imposed in response to the Russian invasion of Ukraine. We've seen measures imposed by the US, by the UK, and by the EU, and also by other national governments, the Swiss, Singapore, Norwegians, and others. So clearly that presents a very challenging atmosphere. What we're expecting to see as a result is, it feels to us as if we have reached a point at which the rate of change has perhaps reduced a little. There was a period of time in which things were happening so rapidly, it was very difficult for organizations to have the available bandwidth to pause and reflect on processes, reflect on risk, reflect on measures that were being taken. And therefore what we are seeing is organizations perhaps in a slightly more reflective mode and less reactive mode. And I think that will then bring these issues around compliance, around dealing with regulators into focus. Because if your organization is either in the middle of that process, or you're thinking about starting that process, or it's something that's on the cards for Q3, then thinking about how you review historic activity, how you deal with issues that may have occurred in the past in that very challenging period when things are changing so rapidly is key. So that's in terms of the thread that runs through this little section. Those are really the kind of 2 headline points around rate of change and complexity. So what we've done on this first slide, really this goes to rate of change. As I say, I think from my perspective, things are perhaps changing slightly less rapidly. There's a little bit more settlement in terms of the legal landscape, but there are still things happening regularly, and these are really just a few highlights, as it were, over the past month or so. So UK tariffs, and therefore customs control on Russian origin goods. We've got new guidance coming from DIT. Importantly, that 15th of June date is critical. Essentially, historically, and we'll come on to this in terms of enforcement, but sanctions violations are criminal offences, and there's also scope for civil penalties. That's the sort of broad outline. Historically, if you looked at the EU measures and you look at the UK measures that were adopted following the UK's departure from the EU, the way the prohibitions have tended to be set out is by creating an activity or a pattern of behaviour which is an offence, whether it's dealing with a sanctioned person or importing a sanctioned cargo or providing loans to a sanctioned entity, doesn't really matter. But in each of those instances, there is built into the language that creates the offence a defence where the person didn't know and didn't have reasonable cause to suspect that they were infringing the violation. So essentially what you have is you have the two elements of the offence bound together. You have the actus in terms of the thing you're not allowed to do, but also that mental element. And what changed on the 15th of June is that as a result of new UK legislation and the Transparency and Economic Crime Act, there is now scope given to OFSI, who's the UK regulator, so the Office of Financial Sanctions Implementation, to enforce even if that second limb, so the mental element, is not satisfied. So in other words, if the activity is present, so if there's a dealing with a sanctioned person or there's an importation of a sanctioned cargo, then notwithstanding the fact that there's an absence of the knowledge or the reasonable cause to suspect, the UK can still enforce. And therefore, essentially where you end up is strict liability, because that defence that was provided for before can be essentially ignored and set aside. Now, there is a question mark remaining as to how OFSI will use those enforcement powers. It doesn't seem to me to be likely, but this is a difficult area and things evolve rapidly, as I say, but it seems to be unlikely that we will see a across-the-board use of strict liability powers. What I think is more likely that we'll see that power used is where it is difficult evidentially to demonstrate that an organization did have that knowledge or did have that suspicion. And therefore, I think that where we will see that strict liability power used is where there are evidentially challenges around the demonstrating that the defense isn't available. But we will have to wait and see. But as I said before in sort of introductory comments, really indicative of what we expect to see around more enforcement. You know, OFSI has this power and it will be expected to use it. Let me come back to that. Likewise, I talked about the rate of change, and the way the legislation changes is by amending regulation. So we're now up to amendment number 10 on the UK side. Likewise, we're seeing regular updates from the EU, most recently with the sixth package with prohibitions on oil and petroleum products, but we set out there what's changed in the UK side. And then also, I think it's important not to forget the other side of the coin, which is how things are changing in Russia. So we are seeing challenges in dealing with Russian counterparties, whether as we put on the slide there, to default on debt repayment, but also Russian legislation introduced, criminalizing compliance with rules, imposing greater challenges on Russian organizations, Russian counter sanctions. So if you compare and contrast the Russia program with, say, the Iran program or Syria or North Korea, all of those other programs are relatively settled. The restrictions have been in place for a period of time. People are comfortable with them and they're not changing very often. But this is why the Russia scenario presents particular challenges, just because of the rate of change. Perhaps we move on to the next slide. What we try to do in the next slide is group the various types of restrictions that are in play. And just before I get to that, and then I'll hand over to Anne-Marie for the next bit. I said there are two challenges, so rate of change and complexity. Of course, the third challenge that I haven't mentioned is the economic importance and the significance of the market that Russia presents for international organizations. I think that's the other key difference here, is that some of the other sanctions programs that I just talked about, whether around Iran, Syria, Cuba, are likely to be economically less significant to many commercial organizations. And therefore the option has been there with some of those markets to make deliberate decisions not to engage with the market at all. Clearly, it's much more difficult with Russia, either to forego new opportunities and indeed to disentangle existing links because of the importance. And that sort of feeds into the types of challenges that are presented in terms of areas of risk, because of course, what the sanctions seek to do is to exclude Russia from international trade in a variety of different ways in order to encourage a change of behavior. So it's common to all sanctions programs. That is the way they work. And therefore, what you see as you look at the evolution of the different restrictions is that they focus on particular areas that are economically significant. And therefore, it is inevitably the case that the more expansive, the more onerous the sanctions that are imposed, the more challenging it is for commercial organizations, because that is what they're intended to do. They're intended to make it difficult to trade. We could spend all day talking about the detailed restrictions across all of those different sanctioning authorities from the UK, US, etc. But what I thought was more useful to do, just in a kind of 2 or 3 minutes, and I'll hand over, is to think about the areas in which risk presents. Because again, what we're thinking about here, and in terms of the focus of this session, really this is around mitigating sanctions risk and identifying areas where there may have been concerns in the past, rather than the granular detail of each restriction. So 6 key areas. Counterparty risk, what I mean there is your customer or your supplier itself a sanctioned entity, or are they owned or controlled by a sanctioned individual or entity, such that they will be treated as a sanctioned person? So organizations will mitigate that risk by doing counterparty checking, due diligence screening, and gathering information about their counterparty. They may then choose to automate some or all of that process, whether through using third-party providers and software to do the screening, or they may do manual checks depending on volume. But that's a sort of key area of risk, is understanding who you're dealing with and whether they present a sanctions risk. Importantly, and significant challenge, what we have seen under the Russia program are restrictions targeting a range of Russian banks. Russian banks have been made subject to restrictions on lending historically since 2014, but also restrictions in place on banks being added to sanctions lists, banks being excluded from SWIFT, banks being made subject to US prohibitions on correspondence and payment through account measures. So understanding not only the identity of your counterparty, but also the bank to which you are either making or receiving payments, depending on the nature of the transactions, is critical so that you can determine whether the bank is subject to any restrictions. What we've also seen on the complexity side is general licenses in place for particular banks for particular periods, and wind down measures to enable people to reduce and to stop their engagement with that bank. So even with the same bank, the nature of the restrictions has changed over time. And therefore, if you were doing a look back, it becomes important as part of that look back process to identify particular periods of time. What I mean by treasury risk is something slightly different. So rather than focusing on the Russian bank, here I'm focused on your bank. So what restrictions has your bank imposed in terms of financial covenants, in terms of other restrictions? And indeed, is there a risk or concern that your bank adopts a more cautious view on sanctions issues and may seek to exclude all dealings with particular territories, not because they're all illegal, but because it doesn't want to have to manage that risk? By cargo risk, what I'm focusing on there is the concern that a particular trading activity, whether it's a supply to Russia or an import from Russia, is itself targeted, because we see a range of different measures. If you look at the annexes in particular to the European regulation and the range of cargoes that are subject to restrictions, any organization that is involved in international trade or which is moving goods or which is financing those movements is exposed to those risks. We've also seen specific measures targeted at vessels and at aircraft in terms of their ability to call at ports, in terms of the ability to people to provide services to them, and also, of course, a lot of enforcement activity directed at the yachts and private jets of sanctioned individuals. And then finally, and I'll hand over to Anne-Marie, I've talked already about the risk of Russian countermeasures. Really, essentially, Russia is imposing its own restrictions on trade with other jurisdictions. It has its own asset freeze list, its own restrictions on entry, which it is imposing in response to these European, US, and other measures. Anne-Marie, over to you.
Thank you. So in this next section, I'm going to talk about what happens when you things go wrong, basically. And I thought I'd start by just highlighting some quotes from Giles Thompson, who is the director of Ofsted. He spoke to the Treasury Select Committee here in the UK last week. They have responsibility for viewing how various pieces of legislation and how enforcement is going in relation to those, and they can call in people depending on what they particularly are looking at. So, and at the moment, one of the key things they're focusing on, unsurprisingly, is sanctions. Giles Thompson talked about a variety of things around resources, the challenges, and obviously within that they were looking at enforcement and what's happening. As Daniel's mentioned, here in the UK historically, enforcement has been quite low. There hasn't been a huge amount of it. We've only had 7 monetary penalties since the powers were introduced to Ofsted in 2017. The most recent of which was actually earlier this year, or earlier last month. But as you can see from that quote at the very top, it's definitely becoming a focus now for Ofsted. They have essentially at the moment, with all the changes, been focusing on implementation, dealing with queries from people. But now that implementation phase is coming to an end, they're dealing with licensing requests, and that will be ongoing as people find that they need to get licenses to undertake certain activities. But they will start to look towards, have there been breaches, and what will we want to do in relation to those? And I thought these particular quotes in the blocks there are basically setting out their kind of views of the category of potential offending. So it goes from people who just don't know that they should be doing things to, at the extreme end, those who know that there are sanctions and are actively looking to circumvent those. And then the middle ground, where people probably know that there are sanctions, know they should probably be doing something, but aren't doing anything or aren't doing enough. And those types of issues will be taken into consideration when they're thinking about what kind of enforcement action to take. And in relation to that, on this next slide, I've set out the options that Ofsted have. Now, this obviously focuses on Ofsted, but it's worth mentioning, of course, that for trade-related sanctions, the HMRC have powers to investigate any breaches there. And recently, in April, with I think it was the 9th set of regulations or amendments to the Russia regulations, Ofcom were also given quite similar powers to Ofsted in terms of enforcement ability in relation to internet service breaches. So there's a restrictions on provision of internet services to certain individuals. So broadly, they all have very similar outcomes in terms of what they can do, ranging from the no action, where, and that's probably going to be where it's maybe a one-off breach. It probably early on, I think Ofsted, I sense just from comments made, are understand that when you've got lots of regulations coming in very quickly, that there might be slip-ups along the way while you're getting up to speed with everything. And I think there would be some sympathy to that, but obviously it will depend on the overall circumstances of each individual case. But in those circumstances, they can decide, okay, we're not going to take any action. They can decide, we'll issue a warning letter setting out what's gone wrong, setting out what they would hope to see in terms of better compliance in the future. If they feel it's necessary and relevant, they can refer breaches to professional bodies or regulators. So for instance, if you were in the financial services sector and there's a breach within your organisation, they can refer to the Financial Conduct Authority. And of course, if you are regulated by the Financial Conduct Authority and there's been a problem, you actually have a separate obligation anyway to refer or report that matter to them. They can now also, and this again comes from the changes that Daniel's referred to in June, brought in by the Economic Crime and Transparency and Enforcement Act, which is they can now publish information about a breach even where no penalty is imposed. So essentially, that would potentially be where they think there's a learning point to be brought out of a breach that's occurred, but they don't think it's a serious enough issue that they want to escalate it to issue a monetary penalty. But of course, it's essentially naming and shaming, and so potential reputational damage for that organisation. Monetary penalties we've touched on earlier, and of course the changes in June now remove the need to prove knowledge of reasonable cause to suspect a breach. Again, there from what I can glean from what I've read about the comments coming out of Ofsted, they're not going to use that all the time, but there will be, again, as part of, the enforcement's essentially part of deterrence. And so where they think there are examples to be made, certainly they will be looking to issue penalties. And they've talked about having a number of cases in the pipeline at the moment, although not for the Russia-related sanctions. And there tends to be quite a long lead time in a breach being reported and an enforcement action happening. So I think to the extent there is enforcement in relation to the Russian breaches and regulations, and I've no doubt there will be, it will be some time down the road before we start to see those. So it wouldn't surprise me if that's not till next year or possibly even later. And then last on that list is referral for criminal investigation and potential prosecution. Those cases would generally be referred to the National Crime Agency, who obviously have been working quite closely with in terms of upskilling their staff around investigation, around things like intelligence, gathering and analysing of information that they have. So they're working very closely together at the moment. And of course, within all of this as well, obviously are also working very closely with regulators in other countries, particularly with OFAC. And there is definitely a lot of discussion about not only, implementation, but I'm sure there will be around enforcement as well. And likewise, I think the NCA have a unit, the kleptocracy unit, which they set up earlier this year, again in response to the Russia regulations and the sanctions coming out, and they are kind of actively looking at a number of individuals, more for potentially looking to seize assets from sanctioned individuals, rather than looking at companies who might have had an issue in terms of a breach of the regulations. That's all I think I will say on that slide for the moment. Moving on, this is just essentially in addition to the steps that Ofsted could take, or it could be HMRC who have not monetary penalties, but they call them compound penalties, but essentially operate in a very similar way in terms of it essentially being a fine, and of course Ofcom. So in addition to potential action from them, there's also knock-on effects as well, in terms of how your bank might react to an enforcement action against you, how it will damage your reputation, whether it will make customers think twice about whether they want to engage you in the future, given a breach. And we've seen this as well on things like bribery sides, although often what will happen is where there has been an issue for an organisation, they then get, as part of their remedial steps, they put in place really good compliance, and actually that can have a positive impact in the future. So there's a sort of, that's a bit of a double-edged one there. But of course, I mean, ultimately, you don't want negative press about you or your organisation. And then finally, there are the costs involved in investigating what's happened and in dealing with the regulators to be considered. I'll leave that the enforcement bit there for the moment and let Daniel talk about some examples we have of breaches.
Fantastic, thanks, Anne-Marie. So yes, I'm just going to talk about three breaches, just to draw again three broad trends. Two of the US focus, but a sort of international impact, and one the recent UK enforcement against Tracerco. If we start with the next slide, what we've done on the next slide is looked back at some historic enforcement. So this is historic enforcement coming from the US, or at least it's historic US activity, but that has an impact on the market. So essentially, if we go back to the previous raft of sanctions against Russia, those coming out in sort of 2014 onwards in response to the Russian annexation of Crimea, what we saw were a series of designations of individuals and entities under, we're focusing here on the US legislation. And the reason I thought it was worth highlighting this is that what we saw in that period, sort of April onwards of 2018, is that Oleg Deripaska and EN Plus and Rusal were made subject to US freezing sanctions. In essence, it became all of their funds and resources were frozen, and it became prohibited for other people to deal with them. Now, the reason it matters for the purposes of what I'm talking about now is that Rusal was a major supplier of aluminium globally. They have operations in Russia, obviously, but also in Europe and Africa, mining, refining and selling. And what we saw was that as a result of the designation of Rusal on the 6th of April there, 2018, a significant spike in the price of aluminium. So what we've got sort of left-hand side of the screen is some fluctuations in price. I think our high is sort of a little over $2,000 per ton, and it increases up to almost to 2,300 per ton, but relatively flat with a bit of fluctuation. What then happens is from March into April, aluminium having hit a sort of low price of below $2,000 per ton, the price then spiked to over $2,500 per ton in response to the listing of Rusal. So there, essentially, what we had is not so much enforcement, but rather an escalation of the US measures or a designation of entities as being entities of concern. But there was an ability of that designation of itself to move the market because it had such a significant impact on the aluminium price. And therefore, I suppose what we were seeing is that companies which themselves had were not guilty of sanctions breaches, they were suffering the consequences in terms of the cost of commodities and raw materials by reason of a major supplier being removed from the market. And therefore, I suppose, as this is equivalent to enforcement in that what we're seeing is the activities of regulators and agencies being able to have a commercial impact on organizations which themselves haven't done anything with respect to sanctions, but are now finding that because supply is squeezed, they are forced to pay an increased price in the market for the raw materials that they rely on. The next couple of slides are a bit more directly enforcement focused. We're going to start with, on the next slide, we've got Stanley Black & Decker. So as I say, this is US enforcement. But the reason I thought it was worth highlighting it is that what we've seen over the, I suppose, perhaps the past 15 years or so, that's a reasonable period to take. As I said before, it has been, over that period, it's been clear that the US Office of Foreign Assets Control, so OFAC, there on the top of the slide, have been significantly more active in enforcing US sanctions than regulators have been in the EU. And one of the question marks at the moment is the extent to which we begin to see, OFSI in particular, really fulfilling much more of an OFAC type function in terms of aggressive enforcement activity with high impact by reason of the size of the fines that were imposed and the level of publicity that is attached to those actions. Looking at OFAC, OFAC historically, and again, a trend that we're seeing in the UK, historically, you would say that OFAC is focused on sanctions enforcement against financial institutions. There was a period, say, from 2010 to 2020 or thereabouts, maybe slightly earlier, cut off. But if you looked at the published OFAC enforcement, it was all against financial institutions. And the enforcement against those financial institutions was for processing payments by their customers, which were in breach of US sanctions rules. And those enforcement actions were highly effective in moving the needle on banking compliance, because the amounts that were being imposed were eye-watering in their size. Essentially, where we were is that there was a US tariff, and for every sanctions violation, the US could fine, they might change it over time, but broadly speaking, around $300,000 per violation. So if I'm a financial institution and I process a payment in breach of US sanctions rules, or I process a series of payments, for every payment, that's the fine. Now, that is, as I say, a tariff, and therefore it's not fixed by reference to the size of the payment. It's not fixed by reference to the charge that I as a bank impose for processing that payment, and it's certainly not fixed by reference to the profit I make in moving that payment. And we saw a range of banks, UK-based banks, European banks, Japanese, Russian banks, US banks as well, enforced against, and fines are running into millions and indeed billions of dollars. So probably the most famous US enforcement was against BNP Paribas, and ultimately they paid a settlement of, I think, $9.8 billion, vast amounts of money. And as Anna-Marie has said, also as part of that enforcement, there were requirements imposed on those banks to change compliance processes. Often we saw OFAC supervisors and representatives embedded within banks' compliance functions in order to increase the compliance. So fast forwarding 10 years on, we had seen that raft of enforcement against banks, and I think that had the outcome that was intended in terms of increasing bank focus on sanctions issues, and frankly, bank nervousness about processing payments that may relate to sanctioned jurisdictions. Because clearly, given the sort of risk-reward matrix that I've set out, from a banking perspective, it makes all the sense in the world to refuse to process a payment where there's any concern, because there's just no upside. What has changed more recently, and the reason I wanted to focus on Stanley Black & Decker, is that we're seeing OFAC looking to more commercial organizations and move away from pure banks, insurers, financial institutions, and looking more directly at operators. So that's the sort of first trend. The second trend here as well that we're seeing is an increased focus on the ability of a parent company in a jurisdiction which is subject to strong controls, because there's a comprehensive sanctions program in place, being expected, particularly from a US side, to export that compliance across the entire organization. That's the sort of second trend. And the third trend, sort of relevant to those who are in corporate or are involved in M&A and other transactional matters, is a focus on what comes out of the M&A activity and the addition of a new sub. So those are my sort of three trends. Looking at the details of Stanley Black & Decker, there's quite a lot of information there on the slide for you. But essentially the point is that Stanley Black & Decker, power tool manufacturer and seller, was in an expansive mode. They bought a Chinese producer of power tools. As part of the due diligence associated with that transaction, they, Stanley Black & Decker, identified that their Chinese producer had been historically trading with Iran. As part of the transaction matrix, it was agreed between the acquiring Stanley Black & Decker team and the current management team of GQ that they would stop dealing with Iran. Nonetheless, they continued to do so. There was then a voluntary disclosure from Stanley Black & Decker to OFAC compliance processes were adopted, and there was then a subsequent re-violation as well. And there, if you look through the settlement agreement, so the way that OFAC and others publicize enforcement is that you will see a sort of enforcement notice, and often at the same time, the settlement agreement is published as well. Because what we've seen from the US and what I think we'll increasingly see from the UK is that the availability of a deferred prosecution agreement and another settlement agreement is hugely attractive from the perspective of an enforcement agency, because rather than having to get to the point of having fully proven all elements of the violation, essentially what happens is that instead by opening the investigation, by requiring the supply of information and by agreeing a settlement, they can more quickly resolve the issue, because the organization will enter into a settlement agreement and will agree to pay a fine to dispose of that investigation. And that was what happened in the Stanley Black & Decker case. But essentially there, ultimately they were fined around 2 million US, but they also had to agree compliance commitments going forward. But there it was clear that the board and senior management of the Chinese entity had actively taken steps to conceal the fact they were continuing to deal with Iran, and they issued fictitious documents, they removed or requested that measures would be adopted so that information that would otherwise ordinarily appear on documents didn't appear. But likewise, there's criticism in there of the parent company for not continuing to monitor and audit the subsidiary. So I think there what we are seeing is an expectation from the US and others that where there are global organizations, there will be not only sort of using language from Bribery Act, the sort of tone from the top being set, and senior management identifying to the entire organization the importance of things, more direct and active engagement in order to ensure that subsidiaries are complying. And I think that US enforcement will continue, but and I think it will continue along similar lines in terms of focus on commercial organizations, and also a look across commercial organizations globally to ensure that they're complying with full sanction regulations that apply across the board. One point to stress here, for those who are sort of a bit more into the weeds on these things, on the US side, where US jurisdiction will ordinarily only attach to US persons, so US nationals, US companies, those are physically present in the US. In the case of both the Iran and the Cuba program, the US also asserts jurisdiction over non-US entities that are owned or controlled by a US entity. So here, not only was Stanley Black & Decker subject to jurisdiction as a US entity, but also by reason of the peculiarities of the US-Iran program and the structure of the company, the Chinese subsidiary would also be subject to US jurisdiction by reason of being a foreign owned or controlled entity. It's not the case across all of the US sanctions programs. It's specific currently to Iran and Cuba, but it's sort of another example of the complexity of these things. In that case, or in the case of dealing with OFAC, there is a discount where organizations provide a voluntary self-disclosure. Interestingly, in the US, that discount for a VSD is available to the first organization that reports. So certainly we've been involved in cases where we've made VSDs in the US, again, in connection with the Iran program and in connection with non-US entities that are owned or controlled by US persons. But there's been a bit of a race against time to make sure that we get our VSD in first, and therefore we benefit from the discount in the event of enforcement. Pleased to say that we haven't had an actual violation, or sorry, we haven't had a penalty imposed, but that race to get it in first is still an important one. If we move on, I'm going to talk about Tracerco. I think, so as I say, what we've seen from the UK is a historic light touch around enforcement. But there are a few key trends from a UK perspective that are important to identify, and then we'll talk about Tracerco. First thing is, of course, historically under the EU sanctions that were in place while the UK was a member of the EU, enforcement was a matter for national competent authorities. And therefore, while Brexit has changed many things, one thing it didn't change is who had responsibility for enforcement of the sanctions measures. But of course, what has changed is that whereas previously OFSI was responsible, or the HM Treasury prior to the creation of OFSI was responsible for enforcement of EU measures as they apply to UK entities, now of course OFSI is seeking to enforce the UK measures, which are only UK entities are subject to jurisdiction. But whether that creates a greater pressure on OFSI to enforce, because this is UK national legislation that they are tasked with enforcing. The second thing to say is that there has historically been pressure on OFSI along with other UK enforcement agencies to demonstrate that they have teeth and that they are enforcing. And I think the third thing, and Anne-Marie's already mentioned this, is that OFSI is benefiting from more resource in terms of increase in headcount, greater budget, and therefore, again, will be under pressure to demonstrate that that is essentially value for money and that they are enforcing. So prior to Tracerco, we had seen pretty limited enforcement. The Standard Chartered Bank case is slightly different in that there was a significant penalty imposed against a bank for violating some of the Russia measures. But Tracerco shows a few different issues. One thing that Tracerco shows, and I'll get onto the facts in just a minute, is that this is not enforcement against a financial institution. So again, similar to the US side, what we're seeing is the UK looking at commercial organizations and enforcing there. First point. Second point, again, similar to the US side, and we'll look at it in detail as we look at the facts. We have a financial penalty which is greater than the value of the sums that were the subject of the violation. So again, not unlike our banking example, where the amount of the penalty that was imposed was substantially greater than the funds that were paid to the sanctioned or in breach of the sanctions program. Again, in respect of Tracerco, the amount that was paid is greater by way of the financial penalty than the amount that was paid, which was itself in breach. And again, reinforcing that need to take sanctions compliance seriously. So the facts are relatively straightforward. Tracerco is a UK entity, but is based in the UAE. They operate in the oil and gas sector, and they provide measuring products and services to that sector. The violation that they committed is that they made 4 payments in total to Syrian Arab Airlines. Of those 4 payments, 2 payments predated the powers given to OFSI to enforce as a civil matter as opposed to a criminal matter. So therefore, the first 2 payments were not themselves the subject of the civil enforcement, but they were taken into account as an aggravating factor. But focus narrowly on the question of precisely what was it that Tracerco had done, which was a violation. They had made these 2 payments, which together are around £3,000 to Syria Arab Airlines, which is a designated Syrian entity. These were flights that they had, these are payments that they had made for an employee to travel home from the jurisdiction. But because of the who was being paid, that was a breach of the asset freeze by making the payments to Syrian Arab Airlines. And it's interesting, if you look at the enforcement measure and the enforcement penalty, one thing that the notice that was issued by OFSI in response to the enforcement focuses on is the fact that Syrian Arab Airlines has been designated by the UK essentially because the airline, it is said, and I'm just reading from the enforcement now, is a public company controlled by the Syrian regime and provides financial support to the regime. The provision of new funds to SAA may in turn be used to fund the Syrian regime's violent repressive activities and prolong the conflict. So therefore, OFSI is looking at the nature and character of the entity to which the payments were made, and therefore the extent to which any payment to that entity is contrary to UK policy, which is, of course, to stop funding that regime. Now, by the way the UK civil penalties are set, again, there's a potential tariff. So for each violation, a civil monetary penalty of up to £1 million or 50% of the value of the payment, whichever is the greater, may be imposed. So here, Tracerco made 2 payments, and therefore theoretically they could have been fined up to £2 million for making payments which were only £3,000 in total. So a very stark difference between the value of the penalty and the value of the underlying payments. Ultimately, Ofsted determined that the baseline penalty they should impose on Tracerco for making these payments was £30,000. So while we're not talking about that stark difference I've just outlined between 2 million and 3,000, we're still talking about a penalty which is 10 times essentially the value of the payments. Now, ultimately, what Ofsted does is that they set a baseline in terms of the penalty that should be imposed, and then they look to a published suite of aggravating and mitigating factors to identify what the fine should be. As I said, while the 2 payments are the subject of the enforcement, the 2 previous payments were essentially taken into account as aggravating factors. There was also an aggravating factor that they, Tracerco, were active in this region of the world, should have understood that there were sanctions in place, and should have had compliance measures in place. Mitigating factors were the fact they made their voluntary self-disclosure, and that reduced it from £30,000 to £15,000. They did take into account the low value of the payments. They took into account as well the fact that Tracerco were fully cooperating with Ofsted. Certainly, Ofsted requested more information, and Tracerco provided it. But we set out there and on the slide there the observations on compliance. Just before I hand over to Anne-Marie, just to reinforce the point Anne-Marie was making around timing. So these are payments that were made in 2017 and 2018. We see the fine being imposed in May of 2022. So what's that? At least 4 years later. Ultimately, the fine was then paid on the 19th of June, and it was then publicised end of June, early July, from Ofsted. So exactly as Anne-Marie says, to the extent that there have been violations of the Russia sanctions that have been in place since sort of February, March, April of this year, while Ofsted now has greater resource, I think in response to, if people are under pressure internally and it is being said, well, we don't need to comply with the measures because there's no enforcement yet, the answer to that is that these things do take time, and therefore things will be in the pipeline, as Anne-Marie has said, and therefore I think we can expect to see that focus. I think I'll hand over to Anne-Marie there. Thank you.
Thanks. Okay, so the next section is to talk about, what should you be doing where there is a potential breach. How do you respond if Ofsted or another regulator get in contact? I thought to sort of set the scene on this bit, I would just start with having a quick look at the powers that Ofsted and the other regulators I mentioned earlier, HMRC, Ofcom, have in relation to breaches of sanctions. Essentially, there's an overarching act, Sanctions Enforcement Act, which relates to some of the powers that Ofsted have. It essentially gives the right to issue regulations for sanctions, and it also, within those regulations, it allows for powers in terms of enforcement to be set out in those regulations. So in relation to the Russian sanctions, within the regulations, there are a number of powers given to Ofsted. They've been extended to Ofcom. HMRC also have similar powers under the Customs and Excise Management Act, which are essentially brought within the reams of the trade sanction violations, so they can use them for those as well as their other duties that they have in terms of investigations and enforcement. So essentially, there is a mandatory reporting obligation for relevant firms. Now, broadly, that is firms that are subject to anti-money laundering regulations. So those in the financial services sector who would tend to be regulated by the FCA, but it could include estate agents, for instance. They're within the AML regulations, casino operators. There's a wide variety of other people that mandatory reporting requirement would apply to. So if you're in any doubt about that, you should definitely speak to somebody about whether or not you are required to report. And that reporting obligation is one to Ofsted, but as I mentioned earlier, if you are in the regulated sector, you also would have an obligation to report a breach in the sense of a potential failure of systems and controls to your relevant regulator. And that's under the AML umbrella. Broadly, financial services, that's going to be Financial Conduct Authority. Many of the other entities or organisations that would be covered by those regulations who are outside of, for instance, accountants or solicitors who have their own professional bodies who oversee their AML compliance. It would be HMRC who oversee a lot of the kind of other entities that don't fit into those other categories. So that's to be borne in mind. And Ofsted also have the ability to require information. So many agencies have essentially what I often call, and others do, compulsory powers to compel production of documents, to compel interviews or explanations of documents. Ofsted have been given a similar power to essentially require the production of documents of information that relate to a suspected breach. And they can require the people producing those to provide explanations of those documents to explain, them in the context. Other entities have similar powers, and they do use those, and we see it in some of the enforcement decisions that Ofsted have published. There are reference to them using their powers, and I'll come back to those in a short while. So that's just to set the background of what they are able to do. And those powers, if you fail to comply with those, then that's potentially a criminal offence within itself if you don't have a good excuse for why you haven't complied. And there have certainly, not Ofsted, but other agencies, I'm thinking of the Serious Fraud Office in particular here, have prosecuted people for failing to comply with compulsory requests for information. So moving on to what does that mean? How do you deal with a breach if it happens? Some of you may have had to think about internal investigations, for instance, in relation to other issues that might have arisen within your organisation. Essentially, you need to have a plan in place, and many organisations will essentially have almost a guide of what they're going to do if an issue arises in terms of reporting responsibilities, who's going to manage the investigation, etc. So you need to think about, well, who is going to be involved? And for breaches like this, where you've got, that can be quite serious, you've got potential reputational issues, almost always the board is going to be involved in some way. But often you might want to have a specific designated subgroup from that board who is responsible for oversight of the investigation. It's almost always going to bring in-house lawyers to the extent that an organisation has those, and a compliance staff, again, to the extent that those are within an organisation. Sometimes, and particularly if you don't necessarily have those in-house capacities, HR staff often are drawn into these types of investigations, and particularly, almost always, because there's likely to be an employee who, these things happen because somebody has done something that they shouldn't have done, whether that's knowingly or by accident, because they simply don't know. So there's always going to be the need to think about, do we need to take disciplinary action in relation to whatsoever has happened? So that's thinking about what are we doing internally to set this up, and then obviously, do we have the capacity to deal with this internally in terms of working out what's gone on? And again, that will depend on your internal resource. Often, and certainly smaller organisations that perhaps don't have such a large internal resource will look to appoint external counsel. In some circumstances, you might bring in forensic accountants as well, depending on the situation. And they, will help you. Something I do, something Daniel does, help you, guide you through the steps that you should be taking, what you need to be thinking about. And one of the first things to do with any type of breach, it doesn't matter, whether it's a sanctions related one or something else, but here focusing on sanctions, is essentially lock down and preserve material. That sounds easy, but sometimes, and a lot of organizations will have automatic deletion within their archive system, for instance. So you need to have IT staff involved in that aspect, making sure that any automatic deletion is switched off, making sure that where necessary, access to particular email accounts or to shared folders is restricted, essentially making sure that material can't disappear. So that's absolutely key, no matter what else you do. And then obviously the investigation happens. And again, as I say, it will depend on the level of the breach in terms of how the types of steps you take, whether you maybe want to have a particular dedicated review platform where you can do data mining to identify material, or whether you can do something a little bit less lower tech, depending on the issue. Once you've worked out what's happened, essentially you're then thinking, right, what next? Do we need to pull in remedial steps in terms of our compliance to make that better? And if so, what are those? And let's get those done, and let's re-educate people and make sure everyone understands. But it also can be where you do find that there's been a breach, you will need to engage with enforcement. And looking back to, if you're in particular sectors where broadly you're subject to regulation for other purposes like AML, you've got an obligation to report anyway. And so then it becomes about, well, let's just think about how we're engaging and what we're saying, and making sure you're very clear and prepared in that engagement. And this is particularly important because it goes to where you are voluntarily disclosing something and a breach. You can, if enforcement action is considered appropriate, and again, there's a whole bunch of mitigating and aggravating factors that obviously and others consider when they're deciding that. But one of the things they absolutely look at is the response, the firm's response to a breach and how they've handled that, and then the engagement. And so if it's full, frank engagement, then you are very likely, depending on the aggravating factors, to be able to secure, as Tracerco did, that 50% discount on any fine. But that's not always the case. And there was another enforcement action last February, another organisation who did self-report. They gave a voluntary disclosure, but it wasn't considered full enough because it turned out there were some additional breaches which didn't come to light until OFSI actually used their powers to require information to get further details of, I suspect, the broader engagement with the particular customers involved. And it discovered that there were, I think, 4 other breaches as well. So in that case, they didn't get that full 50% discount. They only got 26.7% discount. So that full engagement and frank and open engagement is very important. Now, of course, the other thing to think about is, well, when do we do this? When do we do this report? Now, the guidance is reasonably promptly. But of course, what does that mean? And ideally, you want to have a good handle on what's happened before you actually make that report. And obviously recognise that, and in their guidance, they recognise that. But they do say that they would still expect a relatively early report. And they accept that it might not be a full report initially because further investigation needs to be done, and if that's made clear at the time, then they take that into account. The other thing to mention here, and it goes back to something that Daniel touched on around whether you need to be first through the door, which in the US you do. In the guidance that OFSI issue, they do say that the mere fact that another party has disclosed first will not necessarily lead to the conclusion that later disclosure has any lesser value. So they're not ruling out saying, they're not saying if you haven't been first through the door, then that's it, all game over, you're going to get the full Monty thrown at you. It's essentially saying we'll consider it on the facts in your particular case as to whether or not you that has been a truly voluntary disclosure. And around things like that, as other organizations do as well, they will be looking at, well, did they have to report anyway because of other reasons? Were they essentially pushed into it because, I don't know, and this often has happened actually, the press get hold of a story and they've contacted them and said they're going to publish, and so you're at that point thinking, right, I have to report. So there are things like that they will take into account as well in terms of how genuine that voluntary report is. So yeah, it's important to have your group of people in place and thinking about that early engagement early on, even if you don't necessarily know all the facts at that time, but then just being very thoughtful about how you actually then engage and message what's happened. So I'll stop there because we are time is moving on, and the next section we were going to move on to, and essentially the conclusion is what sorts of things can you do. I suspect many of these won't come as a surprise, but Daniel, I'll bring you back in here as well. So these are a few of our sort of top tips, which on the surface look pretty obvious, but there are a few things to draw out of this. I mean, essentially, you need to it's all about your due diligence for sanctions purposes. Obviously, talk about a risk-based approach. So that will be looking at your business, where you're operating, who your customers are, who your business partners might be, where they are based, and then from that deciding where your higher risk is in terms of sanctions in this particular scenario. But essentially, doing checks on your customers, i.e. running them across the lists of sanctioned entities and individuals is pretty much expected. And if you're not doing that, I mean, you're really opening yourself up to huge risk. But it does go beyond that too, and that's, I guess, in some ways the easier bit, although ownership of entities obviously can get very complicated, and our team, Daniel's team and our team in Geneva as well, have been doing lots and lots of advice to clients in relation to ownership type issues and trying to navigate through those. But that's sort of the first part, but then you mustn't forget about the transaction itself, and this brings back in the risks that Daniel talked about really early on, about other parties involved. It could be the banking partners, it could be due to the actual product or service that you're providing. Sanctions can kick in that way as well, so you need to be considering that too in any due diligence that you're doing. The EU have published a variety of guidance and various frequently asked questions, and they have one around due diligence, and in that they also consider adverse media checks to be important. So searching open source material to see where there might be links to sanctioned entities, for instance. So your customer themselves might not be sanctioned, but they might have a link to, and then that's thinking about whether the transaction might in some way be giving an economic resource to that sanctioned person, even though they're not directly on the face of it involved in the transaction itself. So those are some of the things to talk about. Daniel, do you want to pick up on anything?
No, I think I suppose the only thing I would reinforce, and it's sort of a recurrent trend through this, and really thinks about the timing, is I think one of the challenges for when dealing with any investigation is that, particularly if we're talking about historic activity and trying to demonstrate why it was that we didn't know or have reasonable cause to suspect that something was a violation, can be hugely difficult unless there are sort of clear contemporaneous records. So I think in terms of process, for me, where we've dealt with investigations or where we've been doing enforcement work, of course, the starting point is at least a degree of belief that an offence has been committed, and therefore there has been a dealing with a sanctioned person, or there has been a prohibited trade. And therefore you're already slightly on the back foot, because you're then having to demonstrate why you didn't know or have reasonable cause to suspect that it was a violation. And if we're sort of talking about the timelines that we're talking about in the context of Tracerco, where it's 2, 3, 4 years later, and often I think it's part of the nature of the role that individuals in compliance functions may have moved on, information may not be available. I think really just to reinforce that point 3 there on keeping a record, because we're doing that for 2 reasons. We're doing the checking to make sure there's not a violation, but also we're doing it so that in the event that there is a question mark on what was done at the time, we're able to rebuild the factual matrix as it was then, as opposed to focusing on what is known now, which is that there is an issue. But I think, yeah, I think other than that, would reinforce the other points. I'm sort of conscious of time, and I know a number of people have dropped off the call, but perhaps should we throw the floor open now to questions? If people can put their questions either through the Q&A function, or alternatively, if people would like to raise them differently. As I say, I think we've got on the slide contact details. So if people would rather get in touch with us via email, that's fine as well.
Oh,
We have an excellent first question, which we'll touch on, and then a question which someone has kindly directed directly at me. So Anne-Marie, you're off the hook on the second one. I was reading through the questions. Anne-Marie, do you want to tackle the first one? So our first question is, what's the greatest challenge with multi-jurisdictional due diligence? I can then pick up the second question in sort of outline, but I think the second question is probably one for a follow-up conversation as well. So, Anne-Marie, do you want to kick us off on the challenge with due diligence, and then I can.
Yeah, well, I'll do my best on this one. Yeah, I mean, it is. I mean, the mere fact of multi-jurisdictional is the challenge. Each jurisdiction will potentially have their own sanctions regimes in place. Some obviously are more proactive than others in enforcing, but you've got the UK, you've got obviously the US, Europe. There are Europe-wide sanctions, but they have to be implemented at a national level, although there is talk of pulling in a body. But of course, you've got Canada, you've got Japan, Russia have put their own sanctions in place. So it can be incredibly challenging. That's a whole bunch of lists potentially that you are then going to have to look at. Often there are various organisations that offer services where they have the ability to mine all of those lists. So that's potentially, if you are operating multi-jurisdictionally, that's potentially something to look into. You need to be very confident that their services are good enough to pick up changes. Or if you've got a large team, you can look to be trying to do those yourselves, but it is going to be very difficult. And again, it all comes back to your risk assessment as well. And you'll have maybe an overall risk assessment for your organization, but you're going to have to be also risk assessing customer and transactions. And it might be that you are looking at it on a transaction by transaction basis and looking at the specific jurisdictions for those, so that you can be more focused when you're doing your due diligence for those. And I'm afraid there isn't any easy answer to that, but those are the sorts of things I would be considering there.
If I just quickly add one comment to that, and then I'll pick up the second question on there around sort of UK nationals and UK jurisdiction. And I think we've got a third question that we can perhaps have time to deal with as well. I think the other thing, just to reinforce on due diligence, is that often we get any complex international transaction will involve multiple actors, and therefore the question that sometimes comes out is, well, is it really the case that if we've got buyer, seller, ship owner, I know we've got liner shipping lines on the call, and issues around the various participants in that trade. We've got insurers involved, we've got banks involved. Is it really the case that everyone has to check all of the counterparties, and how much extra work does that involve, and why are we duplicating things? And I think there's an important point to note, is that it's, from a legal perspective, you are not able to delegate that due diligence. And one of the things that's clear, and it's worth reading from the Tracerco notice, is obviously is clear in that Tracerco notice that it is not sufficient for any company to rely on a third party to undertake financial sanctions checks on their behalf. And the company committing the breach will be liable for any breach that occurs. The risks of relying on a third party are elevated when that company is not a UK company and is not therefore required to comply with UK financial sanctions. So there, again, the sort of point around that multi-jurisdictional DD is essentially each organisation does need to be checking the position in respect of due diligence, and whether that's around direct counterparty. And it picks up really on another question that's been asked around the needs for GCs to be compliant and to look at supply chain DD. And essentially there, I think it's a combination of things. It's fundamentally, it's a risk assessment. It's understanding whether you're the participants you are dealing with in other jurisdictions are subject to the same rules that you are, and whether they operate in the same manner that you would. Not because if you get ticks in both of those boxes, you can then delegate to them and abdicate responsibility, but rather, it seems to me, the more you have trust and confidence in the parties you work with, the more likely you are, the less likely it is that they will be bringing to you a transaction which presents risks, and therefore the transaction itself is probably, on balance and taking everything into account, somewhat less risky than perhaps a new counterpart in a new jurisdiction where you're not as active. But ultimately, for me, it's just a risk assessment point. I suspect we have more questions than we can work through. And I think Anne-Marie, there's a question there about tech and DD and sort of investigation. Do you want to talk? That's sort of, I'm just trying to work out which of our questions are sort of generally relevant rather than specific.
Tech in due diligence. I mean, there is some. So banks, for instance, I have I'm sure a lot of systems in place to help them with their due diligence, and many financial services firms do. I'm not sure that tech is widely available beyond that sector, but it's definitely, there are things out there that help automate some of the process. But going back to what Daniel said, you have to be, as with if you're within the anti-money laundering regulations, anything you do and any outsourcing you do, and you can outsource to third parties for checks, but you still bear the responsibility, and so you need to be very confident in outsourcing. Likewise, any systems that you're using internally, you need to be very confident that they are going to work properly, and can do things like fuzzy matches, for instance, that they have the ability to check for potential misspellings of names, for instance, so that you can be confident that you have picked up any potential risk there in terms of someone being on a sanctions list. So yes, there's tech out there, but it's not widely available yet, I think, outside of the financial services sector.
Brilliant, thank you. I'm replying to a question, which I think is sort of specific and therefore not general. I mean, perhaps the last question that I can see in the chat is around, do you find, maybe Anne-Marie, you can talk to it first, and then I'll kind of come back in with comments while I respond to the other question. But do you find companies are proactive or reactive, or organizations waiting to see a competitor fined or impacted before responding?
Yeah, well, I think there's a mixture of companies who, some have a higher, I guess you'd call it, risk appetite than others, in terms of how proactive they are being. I think it's a huge risk to not be proactive, particularly around sanctions. I mean, we've got, particularly as we've got the strict liability now. So, and going back to the quotes that the Director of OFSI were making around the different types of categories of those who are genuinely just don't know, to those who do know and have some awareness but aren't really doing anything. In those circumstances where you're essentially turning a blind eye, you are very likely to be looking at a monetary penalty in that situation. And yes, you can sit tight and hope that it never comes to light. But what you've got to remember is even if you yourself have no reporting obligations, it may be that in carrying out the transaction, you're engaging with people who do. So your banks, for instance, legal advisors, to a large degree, accountants, others who have a reporting obligation, estate agents, for instance. So they might realize that there's an issue with something and make their own report. And of course, if you haven't, and you're not being proactive, and you can't demonstrate through all the records we've talked about that you're being proactive, then I think you are putting yourself in a pretty high risk situation for enforcement action. So certainly not something I would recommend at all.
Yeah, I would endorse all of that. I think also with the timelines that we're seeing around the date from violation to enforcement, I don't think you're in a position to say that it's not the case that OFSI is not already aware of an issue merely because they haven't enforced it. And I think yes, I absolutely agree. I think there's a need to be proactive and to understand the issues. Good. I think that brings us to the end of the questions, unless I missed any. I've just replied to one in writing. I think
given, there's one last one which I think we can answer, is, will the slides be available for reference after the session? Yes, I believe they will be sent out to delegates. If not, then please do get in contact with myself or Daniel, and we will make sure that you get a copy of them. But I think probably that's all we've got time for, really.
I think so. There's a final question which I can deal quickly and then close, around PR and how you respond to the publicity. And I think the question essentially is that, is this a potential PR nightmare? I think the short answer is sanctions violations or sanctions enforcement is publicized. I haven't seen what, if anything, Tracerco have said. I mean, it seems to me that different cases will be handled differently, but I would expect that an organization that has committed a violation where there are particular reasons why it's happened, you would want to use the opportunity to set out what it is that the organization is doing differently in the future, that the organization takes compliance with this obligation seriously, that it is reinforcing points which will hopefully have been made in the enforcement notice about compliance with the regulator, and the need to ensure that things are dealt with in future. Great. Well, I think it just, Anne-Marie, do you want to close the session or should I close it?
You go ahead.
I was going to take over. I just want to say, yeah, thanks again to everyone for joining us. Thanks, Margarita and the Legal 500 team for organising the event. We certainly enjoyed presenting it and pulling it together, and hopefully people find it useful and constructive. Margarita, I can't remember, sorry, my brain's too full, but is there a feedback form that we ask people to complete? Certainly we'd like to get people's feedback.
Yeah, sure. And also a recording will be made available should the audience wish to watch the webinar back. So thank you very much to our brilliant speakers, Daniel and Anne-Marie, for this informative session. It was brilliant. We look forward to welcoming you next time. And thank you to everyone. I wish you a very nice day. Goodbye.